I realize it's like if you're shopping and the thing's on sale for half off, you buy more of it. Like you get excited. Like I get excited when I see like people are scared and there's value disruption and
When they're
I don't know.
panic selling 20,000 hustler shirts, like bang.
Yeah, exactly, man.
Let's go. Yeah, it's to be greedy when others are fearful. Welcome to the Matthews Mentality Podcast. In this episode, we are joined by my longtime friend, Keith Wasserman. Not only is he a powerhouse in the realm of commercial real estate, but he also is a leader with an inspiring story that extends beyond property investments. Keith is a co-founder of Gelt Venture Partners, Domuso, and Gelt Venture Capital. Gelt is a private real estate investment company focusing on acquiring properties in the Western United States. Building a real estate empire worth billions, Keith's journey is a testament to dedication, resilience, and the entrepreneurial spirit. Today, we're going to dive into Keith's journey. Please join me in welcoming Keith to the show. Thanks for coming to Nashville.
Yeah, man.
Your first time.
First time, and this is amazing. Yeah, thanks for having me.
You going to do some line dancing?
Yeah, I brought my wife and daughter also. They were wearing their cowgirl hats, and we're ready to go.
You're going to totally fit in because every local wears cowboy hat. No, I'm just joking. They're gonna know you're not from here.
Yeah.
You know? The fact that you're line dancing, you know you're not from here. But no, but it's cool. I saw Keith's daughter and wife. They had their cowgirl gear on, and they're going to a farm today, and
Yep.
it'll be fun.
Alpaca farm. Yep.
I know look, I'm sure you're already doing this, but you're looking at real estate while you're here.
Oh, of course. And there's like some kind of tax loophole if you own an alpaca farm. I think there's some kind of like loophole.
I've heard of this.
Yeah. I haven't studied it. I mean, no land in Pacific Palisades where we live to have a whole alpaca farm, but
in addition to your story, I'm going to ask you questions about developing and or owning multifamily in a market that is dynamic but also has challenges like LA. But in Nashville, we're seeing a different challenge in the commercial real estate side, multifamily. We're seeing too much supply, which, as crazy as this sounds for the rent control mafia in Los Angeles, it turns out, it's not that the rent is too damn high, it's the supply is too damn low. And when you flood the market with supply, guess what happens? Rents come down.
it's simple, man. I mean, like you said it, and the population growth has been astronomical here, but
It can't keep up.
But guess what's bigger? The supply.
Yeah.
That wave, you're seeing it 2-3 months concessions, in the local market we were talking about.
Yeah, and you're seeing like the net effective rent falling fast. And so anyway, we'll get into that. But tell me, what does life look like for you today?
Yeah, busy. When I met my wife, I had nothing. I had one Fourplex. This was in 2009, and pretty much she's been my rock since the beginning. We built this together, and now I have 3 young children, 8, 4, and 3, and she's seen me grow this whole, this business, Gelt, from we were driving down to Bakersfield, 2 hours a week each way commuting, and with these boarded up fourplexes that were REOs. We've come a long way from those days, but
well, you know how you got a great one, a great partner, a great spouse, is because she was a commercial real estate broker.
Oh yeah, man, I married up, and funny way how we met. She actually met cold calling works, everyone. So she literally cold called my dad, who didn't even have a sign up on the building. She's a real hustler, and don't try to hire her.
No.
But she cold called my dad, who had a vacancy, and it was a ground floor space. She had a tenant that needed ground floor for like a PT to put a little pool in and stuff. Mm-hmm. And she cold called my dad, and she's like, is this space available? He's like, who is this? And he started asking her questions. How old are you? And he literally said, Keith, could you open the space for this broker? Didn't tell me it was a young girl. I was 24. She was 23.
This a setup?
Yeah, total setup.
Good,
and
man.
to this day, he won't admit it, but I'm like, and he's looking
man.
for his commission. I said, I give you 3 grandchildren.
A modern arranged marriage, not a traditional one. But he recognized a killer when he saw one, and obviously it's worked out very well for you guys. But so talk to me about, your wife, your 3 kids, you got a lot going on at home. Talk to me real quick. Just give a kind of high level overview of the Gelt empire. What does it look like?
I mean, looking back, it's pretty crazy what we've built, but I feel like it's still early days. Gelt started with a Fourplex in Bakersfield, and today we've acquired over 10,000 apartment units, Denver and West. We currently own over 5,000 of them. I wish I still owned every single one. And in the process, we also, at one time, owned 9 mobile home parks, over 1,000 pads. We've since disposed of them. We also have acquired 11 self-storage properties. We just disposed one of them, and that was one of our biggest IRRs and equity multiples in our history of our company. And then my wife, it's I still help her out, but she does ground up development through her Skya Ventures. So she's the one that builds from the ground up or does extensive rehabs. And then at Gelt, we focus on sort of call it light value add, projects, Denver and West. So pretty sizable portfolio, currently over $2 billion of asset value. I don't know about today's market; things are down a lot, but that's the beauty of real estate. We're long-term holders.
Well, normally I'd say, hey, like the value's whatever you state on your PFS, but I think Donald Trump got in trouble for that recently.
Got to be careful.
We got to be careful in real estate now. All right, let's take a step back. Where'd you grow up?
Yeah, so like you, I'm an 818 guy. I still have that number, even though you went to 310 maybe when you went to USC. I don't know.
What happened was I was a investment sales broker on the West Side.
You got to have 310.
And I was born and raised 818. I was working in Encino, like total Valley rat. And but I was calling owners in West LA, and probably not so much now, but back in the day there was the West Side, and then the stigma like, oh, the Valley. And I think someone advised like, hey, you may want to, if you're calling 310 numbers, you may want to switch to 310. So I got bougie and went to the 310, but I got 818 tatted on my chest.
I love it. Yeah. So I'm still 818, never giving that up, but I grew up in the San Fernando Valley, Woodland Hills. Parents still live in the same house I grew up in, went to a Jewish high school called Milken. And then I stayed local, went to USC. So I've never lived anywhere else outside of LA. It's been home for a long time.
The Trojans, baby.
Yeah. Fight on.
Fight on. What years did you go to SC?
I was there 03 to 07.
03 to 07. Let me ask you a question. I've known you for a while, and I've always known you obviously as an entrepreneur and a deal guy, but you've always had an energy, like kind of make things happen, very creative approaches to finding success and mutually beneficial arrangements. When you were younger, were you like that? Was that always how perhaps your parents or someone would describe you?
Yeah, I think I've always been pretty optimistic. Just make shit happen kind of guy. Very entrepreneurial. I've never had a job. I was on another podcast, and my wife was like joking because like you can't even spell job. She was telling me. So I was always hustling too. I was like buying general merchandise downtown LA from jobbers and then reselling it. And yeah, at SC I had every week I was going back and forth to the Canoga Park where we had a warehouse, and I was buying and selling general merchandise on eBay. We had one of the largest eBay operations while I was in college. Like we sold 200,000 items. Yeah. So
one of the interesting things with guests that we brought on, there's so many of them are genuine entrepreneurs and founders. And I didn't do this. So like I didn't come into this role as a host expecting this, but an overwhelming majority of people who are in your position, the entrepreneurial gene they were born with, and it showed up very early. Whether it's starting a business at 9 or selling eBay, using eBay as a platform to create arbitrage in college. It sounds like this was something that you just did.
Yeah, I don't know how much is hereditary versus learned, but I mean, my father was a pretty successful attorney, and I never was interested in law, and he always said, don't be a lawyer. And I saw how miserable he was, but he grew this practice, but he was always doing stuff on the side, and his real estate investments with his clients, and they did a few properties in the area have, become way more valuable than his whole law practice. And I saw that as they were growing the practice. I'm like, real estate's the way to do it. And so that's sort of ignited the bug. And then my cousin came to me and he's like, we have this fourplex in Bakersfield. And I said, in God's name is Bakersfield? But yeah, I mean, I've always been interested in just building a business, and I didn't know real estate sort of fell in my lap,
So were you a good student as a kid?
I was a really good student, which is, most entrepreneurs are sort of C students. And I wish I did fool around a little more and, didn't take myself so seriously. But I was a straight A kind of student, which is like in the box kind of thing. And usually entrepreneurs are out of the box, right?
Was that because of a pressure you created, or was that an expectations your parents put on you?
I think it was a pressure I created because I felt good getting all those A's, and I wasn't like a star athlete like you must have been. It was something I could control. I was good at. I have tremendous focus. I just could it's all about in school, like memorizing and repetition. And I would just sit at home and do homework all night. And yeah, I had a small group of friends and played a little golf, but it was literally school for so long. And then at SC, I finally loosened up and I had a girlfriend and I did, the eBay business, and I learned there's more to life.
You went out. You went to the 9-0.
The 9-0, exactly.
Let's
yeah.
go. That's where I took my wife on a first date. No. So when you were, junior high school, and you were getting good grades, it made you feel good. Was there an element of that, of like, I want to do something great with my life. I'm going places. I can't be distracted with these childish things. Like, were you locked in a sense that even at a young age you knew not necessarily what you would be doing, but you knew where metaphorically you wanted to go in life?
Yeah, I mean, I always knew I wanted to start some kind of business, and I literally worked for half a day. My dad, was friends with this pretty prolific developer, Jonah Goldrich in LA. And I went to Jonah's office and I was just filing paperwork, and I quit at lunchtime. My dad's like, at least finish the day. And I'm like, and I told Jonah, and he respected it. He's like, you know what? One day maybe we'll be doing deals together. And later on, we did deals together. And his grandchildren, he was investing on behalf of his grandchildren with us. And so it went full cycle. But yeah, I have no problem pushing papers, but I wanted to be my papers. I didn't want to do something for someone else.
And so you're a good student. You get into USC. Was that where you always wanted to go?
No, I mean, I applied to, I didn't get into like Harvard and Stanford, the top of the top, but I got into a lot of other schools that were probably better, but I just wanted to stay close to home. I got into like Emory, Northwestern, and, UPenn and all these other places. But SC was, I like the, school spirit. I like the entrepreneurial, like in the business program, and just being close to home.
It helps.
Nice.
It helps. The football team was winning a lot of games.
I know. I think someone close to me across the table was a good player on that team.
Yeah. Well. Yeah. I mean, I didn't play as much because we had good players, but there were times I'd be sitting on the sideline just like dying to go in, and I'd look up in the stands. Probably saw Keith Wasserman up there, drinking beer and having a great time. I was like, it would be better if I just did that, but no, it was a great time. And so you went down to SC. You said stay close to home. Do you have brothers, sisters?
I have a younger sister, 3.5 years younger. And literally all the talk at the dinner table was me and my dad talking business. So she got sick of it, never was interested in business. And she's now and she was never a great student, but she's like a career student. She got her PhD in psychology. Mm-hmm. She works private practice and teaches at Pepperdine, and very different. But yeah, we're very close.
A PhD in psychology in West LA versus a real estate. Those two very different philosophies and paths you took.
Yeah.
So you're at SC. At what point talk to me about this eBay thing.
Yeah. So eBay sort of fell in my lap. I mean, we had a family friend that had this horse saddle that they spent a lot of money on, and it was just sitting in the garage getting dusty because they were not riding anymore.
By the way, I literally have a horse saddle that
eBay. Go to eBay.
We spent a lot of money on it, and it doesn't fit the horse my wife has.
Dude, I went. This was 2003. It was early on, and they didn't know how to use eBay, maybe even a damn computer. But they're like, "There's this thing eBay we heard of. Could you sell?" And I'm like, "Okay." So, I just jumped in it, learned it, and the thing sold for like hundreds of dollars. It was just getting dusty in their garage. So I'm like, "Oh, this is so cool," And then started selling a few of my own possessions, and I'm like, "This could be bigger." So I started going to auctions in LA, buying stuff from jobbers, and you could sort of see what things are selling for. So you make money on the buy, right? So if I buy something for $5 and could sell it for 10, 15, 20, whatever, I'm like, I already knew my profit margin. And so I started just buying and selling. And my dad was like my banker. I would go to my dad to borrow money, go sell and then pay him back. And then
what was the biggest purchase or the biggest risk you took in that business?
I bought like 20,000 Hustler t-shirts. Like literally it says Hustler, and they had some kind of crazy graphic images, some of them. And
like the magazine?
Yeah. These were all closeouts and stuff. And like, and I sold them. I think at the end of the day, when I liquidated the business, we donated it to the National Jewish Council Women's Thrift Shop. Like they got 20,000 Hustler t-shirts. They probably, I hope they didn't put those in the stores. But
I was about to say, you see a bunch of women walking around LA with Hustler shirts, you know where it came from.
Yeah, but I mean, like that was a big buy. I bought a ton of DVDs, like these packages, like Band of Brothers, and then a lot of like DKNY coats, Perry Ellis leather jackets, like, and these were, a lot of them were like IRs, irregulars. They had like little blemishes, but I mean, you got them for pennies on the dollar.
But you just arbitrage. You're like buying for 5, selling for 10.
Yeah, it's like it's hard to do, but if you find a building that's, you buy for 5 million and already it's worth 7 because they didn't hire Matthews to sell it or something.
Nah, I don't know about that. No, typically it's because they didn't turn units, or the building looks tired, or there's something wrong that someone like yourself can determine that it is fixable, and then it's just quantifying the cost and making sure you know what the exit value is.
Yeah,
just on a much smaller scale in terms of an eBay product.
Yeah.
So what'd you major in?
Business. Entrepreneurship was my, what do you call it, like minor or whatever, and did business administration and made some great connections. Some of my peers went on and founded some amazing companies, Instacart, Tinder, some of the connections I made from USC. So
yeah, I'll give SC a plug. I saw my wife text me maybe a week ago. It was the schools, top 10 schools in terms of number of billionaires. And it was all Ivy Leagues. SC was actually number 4 or 5, which,
wow.
And the rest was like Harvard, Penn, Stanford,
Yeah.
So clearly there's an entrepreneurial spirit that exists at that school, and hopefully they value that and hang on to it.
Yeah. So Aaron Levy from Box was down the hallway, and he was trying all these different businesses. All of them were failing. I literally gave him like my Von Dutch apparel to
Von Dutch.
Yeah, it dates me, but it came back in style, I think. But I would trade him, like he would help me with my banner ads on eBay, and I would give him like Von Dutch hats and stuff.
Von Dutch hats, I think it was Ashton Kutcher made him popular, like the trucker hats.
Yeah.
Yeah. You probably got into Affliction. You probably were going to the bars in West LA wearing Affliction shirts and cut off jeans.
I don't know about that.
All right. So entrepreneurialism, the business school. When did you graduate? 07?
07, yeah.
Okay. And what'd you do out of college?
So I'm glad I graduated 07 and sort of took a year to learn real estate. I got my broker's license. I just studied for that. I went to any meetings my dad had with any real estate that he owned or clients, and just try to absorb as much as I could about real estate. And
did you ever think about becoming a broker?
No, never.
But you wanted to.
I thought that was a good way to just learn the lingo and learn some of the behind the scenes what's going on with the brokers, and I think it really helped long term. But
Zach, you hear I say you ever thought about being brokers? Like, no, never.
I mean, my wife was a broker for 7 years and did very well, but it was always on to your next kill, and it was just, she's just so much happier, like, developing and building, buildings.
Except when you have city council meetings with crazy people.
Yeah.
I'm gonna bring that up later. But all right, so you get your broker's license, you're meeting, you're networking, and you're really, and these are my words, evaluating the landscape.
Yeah.
And something was happening in 2008, right? There was a little meltdown.
Yeah. I mean, every day I saw in the Wall Street Journal, 10,000 jobs lost here, 20,000 jobs, stock market crashing. And I mean, it was really scary. And
Bear went down.
I'm glad I wasn't trying to find a job during that time, because
Country Ride, Bear, Lehman.
all that stuff was melting down, and and I ran right into it. I went into real estate, and people thought I was crazy, and that's usually a good sign. Crazy like a fox, I guess.
And so you had touched on it earlier. Walk me through your first purchase.
Yeah. So my cousin and business partner Damian Langeri was working at an environmental consulting firm, and he got let go during this GFC, and he said, we were always trying to start some kind of business together, and nothing really took off.
You guys pretty close.
Yeah, we grew up together, and he's like, well, my dad has been buying and renovating like 5 to 15 unit apartment buildings in Bakersfield. He lives in Pasadena, but every week he's going to Bakersfield. And I said, where in God's name is Bakersfield? And so I took a journey out there, and I sort of liked what I saw. It's a very industrious town based on oil and agriculture, and we thought we had a premise that I would come out of the recession really nicely from those industries and add population and jobs, but it was ground zero for all the foreclosures, and it was overbuilt, single family. But we were out there and we had our pickings. I mean, we were the biggest buyer. We went in and we were in the Bakersfield, California newspaper. Him and I was wearing sweatpants, and but like we bought 15 of these fourplexes in the first year in 2009. So the first one was December of 08. Damien actually bought the first one. He so literally an FHA loan. So he would he was able to he claimed he lived in one of the units.
Yeah, I was going to
be careful on that one.
Yeah, I was going to say I my first purchase was a 4 unit.
It's the best way to do it, man. And if you could qualify for FHA, it's only At the time, it was 2.5% down. Maybe it's a little more now, 3 or whatever. And he didn't even have that. So he borrowed $5,000 from a friend. He got a cash advance of $10,000 on his credit card, which he used to do the rehab. And that's what put us in business. And then I joined the second one. I put the down payment, like $35,000. He got on the loan because I didn't have W-2 income. And we just kept buying one after another.
So a casual observer would say, okay, so you're getting a 97% loan and the 3% you're borrowing, you're basically putting no money, you're fully levered.
Mm-hmm.
That's very risky. Now,
not when your each unit rents for $695 and the whole mortgage payment was like $600. I mean, it was crazy.
So that's what I was going to say. How much of it was just pure fundamentals of underwriting? You're like, look, I get the concept of high leverage could be risky, but the math is so overwhelmingly positive. And how much was just you just being a risk taker?
I mean, these buildings sold for $400,000 to $500,000 range, 2006 at the last height. We were picking them up for $100,000 to $150,000, and they cash flowed like crazy. Each unit was renting for $695. I think the building's mortgage payment was only like $600 or something crazy. Mm-hmm. So we felt comfortable. You have 2 units rented, you're still cash flowing positively. Today, yeah, that would be very difficult. Maybe not today because prices are down a lot. But which makes it a great time, I think, for people to get started. And for us, we're putting the pedal to the metal. People are scared and hesitant, and we're trying to actively buy a lot.
Let me ask you about the feelings of being scared or hesitant. At what point did those ever creep into your mind as you were launching this business and you were buying? I mean, purchasing 15 deals. I don't care how good the math is, and it sounds like it was great. There had to be some fear, right?
Fear. Because we had never had any experience, but we had great mentors. Damien's dad was very hands-on and taught us how to deal with contractors, and he would help us, go to the buildings. And my dad was very involved in helping us with the brokers and the legal, and we had great mentors, I'd say, from the beginning.
And so did that provide you the comfort where
I think so.
Yeah.
I mean, I do have fear, but it's sort of fear of not succeeding is my fear.
Yeah, no.
My fear is like my own insecurities of not growing something to being really big.
Yeah, fear of not realizing your potential or achieving.
Yeah, or fear of losing investors' money, which, knock on wood, we've never lost $1 of investors' capital, but like it weighs on me when we have, quarters that are lower, or, we've gone full cycle on 30 deals, but I think 3 of them we underperformed. No one bats 1,000, but it's like I still hate it if we put something out there and we don't hit it,
Yeah, and it's you could have 10 wins in a row, but if you have one where you underperform, it just like it sits there.
Yeah.
So you're buying 15 units or 15 buildings of 4 units in 2009. Were you doing this one at a time, or was it a portfolio?
Yeah, one at a time. I mean, the first one was the FHA loan. The second one, I put the down payment. The third one, my dad put the down payment. So we had 3 of these things that, we took from REO, boarded up to, cash flow producing. And then we sold 49% of that entity that owned 3 of these things to one of my dad's like early employees that moved to Israel. And he saw what was going on in the US, and he's like, I have $200,000 I want to put into real estate. So literally we marked up the portfolio because we created all this value, and then sold him 49% and used that money to go buy 2, 3 more. And then we brought in one family friend who put in the money to buy the property 100% cash, but they would lend us our half to buy it. That's how we did it in the early days. So like it was $150,000. They would lend us $75,000 at like 8%. So we would own half, and then they would own half, but without any of our own money. And because we didn't have much or any
money.
And the
asset itself was the collateral for the loan, I'm sure.
Yeah. Yeah. So that's how cool. we didn't know about syndication and how to set up these processes until I met Sam Freshman, one of my mentors and partners in some deals. He wrote the book on real estate syndication. Standard management, yeah.
I know Sam.
Yeah, Sam's been awesome. We used to meet with him once a month for many years.
Yeah. So you started buying all these fourplexes in Bakersfield. Walk the audience through how your business evolved moving forward.
Yeah, so like 15 fourplexes. We cut our teeth. We learned how to, run, oversee the operations of renovating and leasing them out, acquiring them, and then we moved to syndication. We bought our first big deal December of 2009, and it was a 78 unit. And the way we made that jump is I brought on 2 partners. We call them the gray hair partners, right? So I brought in my dad as a partner who helped by signing on these, loans. Mm-hmm. He brought in a lot of our early investors that were family friends or clients of his. and our first deal was a 78 unit building in Bakersfield. We bought it for 3.9 million. We raised 1.3 million from like 8 investors. We rolled our entire AC fee. I don't even know what it was, 50 grand, 100 grand, like back into the deal. So we didn't take any money out. And that's how we got started with like buying, syndicating deals with groups of investors and, buying larger
and at
apartment
this
buildings.
point, you felt you knew the Bakersfield multifamily market pretty down.
And then we also brought in another gentleman, Adrian Goldstein, who he worked with his father-in-law owning and operating larger apartment communities, but wanted to sort of do his own thing and, be a mentor figure and help younger guys. So we brought in these 2 gray hair partners that, Adrian had the experience running larger apartment communities, and he was a former broker also at Cushman and stuff. And my dad, and, they took a lion's share of the ownership. It was like they were, I think, 2/3, and we were only third, me, Damien, and another younger guy. But we were fine with that because our value was relatively low compared to what the value they brought. But then over the years, we renegotiated. We went up from 33 to 45 to 50. Like, we kept showing how valuable we were and stuff.
So let me push pause on your story real quick. Obviously, in your role, I'm sure you get this. In my role, I do. I get a lot of people come up who aren't in real estate, all right? But they want to be, and I'm not even saying from a career sense, I'm saying from investment. They're like, yeah, I was thinking about buying a rental home or thinking about buying a 4-unit little apartment building. I've saved up, a couple $100,000, but they don't. And I think many of them are paralyzed to a degree by fear of loss, fear of, making a bad investment or a lack of confidence in their own decision-making. Why do you think you didn't have that? But at the same time, a lot of people who might be listening to this, who are considering making their first investment into commercial real estate, they're not pulling the trigger. They're not doing it yet.
I don't know if I have a screw loose or something, but yeah, the fear, like I get a little fearful, like when things get really heated and there's 20 offers on deals, and I'm like, this is an indicator, like we should back off a little bit. It's the fearful and greedy thing. I get greedy when people are like, right now, there's so few offers on deals, and we just bought a deal from like Avalon Bay. Gelt has no business buying deals from Avalon Bay, but there's like no bidders on these things. And in Southern California, people are scared. And yeah, there is a lot of issues with, it's rent, rent controls. And, there are some, population moving out, but at the right price, at the right cap rates and values, it makes sense. And, everyone's, Sunbelt, but like these markets are getting crushed with supply, and the cap rates got so low. People were going to Sunbelt buying 3 caps. I was buying, 4 and 5 caps. This was at the height in Southern California. And I think we're going to be much more insulated because like literally, there's no new supply and
no new supply,
and rents have softened, but not like they're not dropping dramatically.
No. So yeah, it's the be greedy when others are fearful. I say it all the time in this podcast because like a lot of successful people sit in your chair that you're in right now. That is the story of their success. It was very much moving forward when everyone was backing up.
Yeah, I think like I realize it's like if you're shopping and the thing's on sale for half off, like you buy more of it. Like you get excited. Like I get excited when I see, like people are scared and there's value disruption, and
when they're panic selling 20,000 Hustler shirts, like bang.
Yeah, exactly, man.
Let's go.
Yeah, but I bought it for like $2 a piece. I was selling them for $10. It's like huge margin.
I think I got one of those in my closet. No, I'm just joking. All right. So speaking of moving forward, you founded the company Gelt 2008, 2009.
Yeah. I mean, Damien bought the first Fourplex December of 2008, and which was like the bottom of the bottom. And then March of 2009, we bought the first Fourplex together. And that's when I met Galena pretty much. And yeah.
So tell the audience, what does Gelt stand for?
Yeah. So Gelt means money in Yiddish. And my grandma was a Holocaust survivor, and she spoke Yiddish to my dad, and he never really spoke to me. I know a few sayings and some bad words, but like I thought it was a cute word that sort of would set us apart from all the other firms that sort of sound the same. We started using the term GVP for Gelt Venture Partners, but Gelt's in our DNA, and it's all about, hustling, making money, for our investors. Then if they do well, we do well. And I don't know. It's just,
I love it. I love that. When I asked you and you told me, I was like, man, that's badass.
Yeah. During Hanukkah, you have these like chocolate coins that are covered, with the gold foil. That's Hanukkah Gelt. So, I thought it was just a cute and easy to remember word.
I love it. And my guess is a lot of the audience probably didn't know that, and now they do. And my guess is their reaction was like mine. I was like, oh, that's cool. But all right, so you're in Bakersfield, you're buying units, but there was a point where you shifted more to Phoenix, right?
Yeah, so Bakersfield 09, 10, and then Phoenix we started in 2010. So we walked into the Berkadia office in early 2010, and it was ghost town. I mean, there was it was empty. No one was working there. Like one broker, he was looking, you know, I don't know what the word, schleppy, forlorn. He's like so depressed, and it was a tough time. There's no transactions, and he's like, we went to him, and I'm like, I want to buy, you know, these big buildings. He's like, kid, you start with like a 30-unit building, and you know, build a name
Now,
for
was
yourself.
this actually Berkadia, or was this because Berkadia purchased Hendricks and
I
Partners?
think it was Hendricks at the time.
Yeah, I was going to say because Hendricks headquartered was Phoenix.
I think it was Hendricks at the time before they got acquired.
Our chief COO at Matthews, Dirk Brewer, was one of their top operations people, and so
Cool.
I kind of know the story. But yeah, that makes sense.
But we showed up in like shorts and t-shirt. I mean, it was 120 degrees. I was visiting my grandparents out there in Phoenix. It was just ground zero for like the epicenter.
It was kind of like a bigger Bakersfield.
Yeah.
No offense. I know Phoenix very
fifth largest city in the U.S.
beautiful. I'm just saying, like
they got crushed.
They got crushed.
Yeah. So we went out there and then we started bidding on this one deal, and I can't believe we won it. It was 415 units from Aimco on Camelback. It was all studios in ones, an old property.
When you won it, were you like, wait, what?
Yeah, it was like we went from buying a $3-4 million deal to a $15 million deal, and it actually took 6 months to raise $5.5 million.
It had to have been a scramble.
Oh, it was terrible. It was, but literally that deal is probably worth over $100 million today, and I mean we sold it for like 27 and a half, and it kills me. But yeah, we even. Yeah, I don't want to say it, but like we even retraded. Like one of my partners was, we don't do that anymore. But like you were able to do that back then because there's no buyers behind you.
It was all leverage, and it was like, what are they gonna do? You know?
Yeah, I mean, like we fell out, and then they came back to us. Like, yeah, we don't do any more of that retrade nonsense
of course not.
today. But
hear that, brokers? No retrading.
No, I literally, yeah, long story, but we sometimes when we had a partner that would cut the broker's commission, I would say sorry and write them back a check.
You got to take care of those brokers, guys.
Yeah.
They're
the lifeblood of the business. It's
are.
literally, it's all relationships, right? When you're dealing with 200 unit and up apartment community. So we try to have a relationship with the owners and sellers first, right? Because they're the ones that make the decision. And then if we don't, it's the broker, because they can help, you know, they want, at the end of the day, they just want to make the transaction smooth and no nonsense. And we're good buyers.
I tell people, you got to take care of brokers. People are like, well, of course you say. I said, listen, just because I say something that's in my best interest doesn't mean it's not true. And that is true. But so you said 415.
Yeah, we bought this $15.5 million. It was a huge property. Damien, my cousin and business partner, literally, like, we didn't have much money, so we lived in the model unit. We would drive back and forth. Couldn't even afford to fly and stuff. So like, we drove through these like haboobs, they call it, or monsoons. I don't know. It was crazy, but. We cut our teeth with it. Had 5 chillers, 5 boilers, and 5 pools, and it was a huge property. But it was run as Fern Tree and Colonnade Gardens. We shut down one of the leasing offices and combined it and made it the Colonnade. So we made it more efficient. We renovated it, rebranded it, lifted rents in the process. But in that time it was tough. It's still a lot of free rent, concessions given away, fundamentals. We bought it like an 8 cap or something crazy. I mean, we had to assume these loans that were like 6-7% loans.
Yeah, I was going to say, how'd you get debt for that?
We assumed like 3 loans on each property or something. It had a first, a second, and a third, something crazy. But it was agency financing, we assumed. And then
was there any concern at any point about losing that asset if your concessions were too much or the lease up was too slow?
No, because there was still good cash flow from day one. What we learned after a few years of holding it is it's hard to own older buildings for extended period of time. We were undercapitalized. We should have raised way more money to do some major, like, it had plumbing issues, and we did a major repipe, but we needed probably more capital. We were undercapitalized.
And that was a valuable lesson.
Yeah, very valuable. Yeah. So the last many years, we've been selling a lot of the older buildings and exchanging into newer buildings for that reason, and because the values, the cap rates were like similar between old buildings and newer buildings. So let's upgrade the portfolio.
You'd see a new building at a 4, and you'd see a mid 1980s at a 4.75.
Yeah.
Like, well,
no. So literally, we bought a deal in Denver 8 years ago for $74 million. We sold it for $141 million, and we sold it like at a 4.25 cap, and then we rolled it into a brand new building in Long Beach for like a similar cap rate. So, and this was an old 60s building in Denver. So that was the trade, the arbitrage we made.
And so this was the first big deal, this Colonnade, this combination of properties that became Colonnade. When you purchased that, was that a moment where you said, hey, let's kind of digest the pig and the snake, like let's just focus on this asset? Or were you still just saying, all right, we're just gonna keep acquiring?
we just kept acquiring. We kept putting the pedal to the metal. We didn't slow down. But
where did you build? Talk to me about your, I'll call it your team infrastructure. Obviously, you had your partner. Like, there had to have been a rapid buildup on the operations side of Gelt, like, because two people can't be driving out and turning units themselves while still buying more properties.
It was it was three young guys, and then the two gray hair partners was five of us and then we always outsourced property management, so that sort of kept us lean and mean. But we didn't add more people until, I don't know, maybe another year or two later. One of our first hires was Jeff Harris, Ron Harris's son, and he became a partner after he was with us for 10 years. And but the team, we sort of started hiring where we had holes. Like, we needed people, to help us with accounting and construction management, and wherever our time and energy wasn't best spent. And nowadays I'm not as involved in the day to day like I was. I was on all the asset management calls and dealing with all the brokers and flying out and seeing all the properties. And my role's changed a lot.
Let's touch on that. What did your day to day life look like? And we can break it down simply. Like, was it a 7-day-a-week job? 14 hours a day? Like, what did Keith Wasserman's life look like? From 2009 to over the first 5 years of building this?
Yeah, it was just, work was you had to be on at all times, with dealing with investors. We had investors from other countries. Like, I was always dealing with investors, and, we would always bring them to the properties. Like, Bakersfield was easy because we could drive them, but we would literally use our AC fees and charter flights to bring our biggest investors to see these properties. And, it would have been nice to be able to keep that money, but that's how we grew the business, by courting and giving the white glove treatment to our investors. And real estate is something you could see and it's tangible. And we called it the dog and pony show, but we would bring them to the property, other properties around the area, and literally show them what our plan was for the property. And
you hire some temp models and actors and actresses.
Exactly.
Did you?
No,
you never did that. You're like, hey, this building needs to activate the space.
Yeah, that's I'm not smart enough to do that.
And so you had mentioned your wife, Yelena. She was
doing tenant rep office for, she was at Grubb & Ellis, Colliers, a few different firms, Charles Dunn, and doing very well.
At what point did she start working with you as well? Or
she started, I sort of pushed her off the ledge to do her first deal, which was a single family home in West Toluca Lake. She identified this area that was sort of transforming. She was one of the pioneers to start renovating homes there. So she took something down to the sticks. She basically found this gentleman that owned like 3 or 4 homes. She was, she's an expert cold caller, and befriended this guy. And he, I think he carried back the paper. We didn't put much money in.
That's great.
Yeah, she was able to, but she partnered with a contractor. So the GC did the work. We put up a little money, and she learned by shadowing him. And then she built another one, and then another one. And she built a bunch of these single family homes, and then started with small apartment communities, like a 9-unit building she bought from a residential broker. It was a church that wasn't being used anymore, but they had like a church member that was a residential broker listed, and it was across the street from each other, 2 sites, and she double escrowed, sold one to reduce the basis in the other, and we got it basically for like nothing.
Just doing deals.
Yeah, she was just hustling, like finding deals, doing them and building them, and 9-unit, then a 21-unit, and she just kept. And I would help her with raising capital,
sure.
But she would literally spearhead these projects. I didn't want to be partners with her, and I want to have a little separation.
Yeah, for sure, I get it. And so in getting back to, especially when you're seriously dating, engaged, and then married, and this kind of gets into the concept of balancing your professional and personal life. But as you're in those first 4 or 5, 6 years of Gelt before you started building your family, it sounds like it was just kind of work all the time. And how did you look at your commitments and this basically total absorption into your professional success versus your balance?
So work for me was like fun. I integrated that into my life. Like, one of my first dates, I brought Galena to Bakersfield, and we laugh about it, but she stayed with me. I mean, we literally went to the 78-unit building, the model unit. It didn't even have like a working toilet in it. We were renovating and stuff. But she admired the hustle. She saw, I would take her to where the oil derricks are, there's like these flashing lights. I thought it was romantic and stuff, but there was like cop cars pulling up and stuff. But I mean, it was just part of our life, you know. And we even with our children today, we will bring them to the ribbon cutting of a project she does, or a grand opening, or like integrate them into the business. And like my daughter will drive around town, she's like, that building, Mom, you should buy it, needs renovation.
That's
It like looks
funny.
ugly and stuff. And yeah, so it's
That's
just part of something we enjoy in our everyday
it's,
life. I don't know.
I think especially younger professionals have this, in my opinion, misunderstanding, but understanding of what work-life balance should be and when it should be. And I think the concept of work-life balance, where it's like, hey, don't work too much because like you need time for you. A lot of that is rooted in this reality that what they do, they can't stand doing it. So it's like, don't do it too much because you really don't like it, or it doesn't provide you satisfaction and fulfillment. So make sure you get to those things, whatever those things are, that balance your life. But if I'm hearing you correctly, for someone like yourself who found let's call it a career choice, but a career pursuit that was very much satisfying, fulfilling, and ultimately fun.
Yeah, it's got to be fun.
It wasn't like, oh, it's work in the sense like, oh, I have to work. There's certainly, I'm sure, elements of that.
Oh yeah, and there's challenges, and some days
Yeah.
it's very challenging, and I'm down, and not every day's rosy.
But it wasn't like that cliche concept of like, quiet desperation. I can't stand what I do. Get me out of here.
Yeah, it was the opposite. Like on the weekends, I can't wait for Monday to go back to the office and be with everyone, and like, yeah, it's a big plus if you could really find something you enjoy. It doesn't feel like work. It feels more like play,
And that's been commercial real estate for you.
Yeah, I'd say just, building this business, I'm like a deal junkie, finding the next deal. I love raising capital. It's challenging, but it's something, a lot of people don't like doing that. I love building relationships with people and raising capital. And that's sort of my role nowadays,
Walking them through this great vision of what you're going to do and actually doing it,
Yeah. And I still feel like we're just getting started. I mean, the sky's the limit.
You're young.
Yeah, my back doesn't feel young, but I'm 39, and we have a lot of time. And real estate is something you can do your whole life. It's not like like a professional athlete. They have a finite career, right?
No, real estate we get better.
Yeah, just keep improving.
Hopefully we peak in our 60s from a professional sense. We peak, but
yeah.
But what's been the biggest challenge for you in your professional pursuits?
Biggest challenge, I'd say.
Like this just really just been hard, and it's kind of.
I mean, partnerships. It's now 3 different partners and stuff. So I'd say partnerships is the most important. Like a marriage, right? Picking the right partners, and
not every hopefully marriages, but not every relationship's meant to last forever.
Forever, yeah. But we've learned a ton from different partners we've had over the years and stuff, and without them, we wouldn't be where we are today. But yeah, I think. Those were some challenges.
Do you think part of that is because so many people invest or will invest with partners because there is comfort in someone being in the foxhole with you, and there's value and ideally skills and knowledge and they bring to the table, and in addition to maybe a good balance sheet. But
yeah,
do you think over time partnerships can be frayed? Because people say they use the word grow, like, oh, people never stop growing. I kind of call it evolving, like, and sometimes. When you go into a business or an investment with a partner, day one, there's total alignment. But as you both evolve and you both change and you both grow as people, like there can be misalignment that because you grow in different directions. Is that something that you've seen?
Yeah, 100%. I mean, the positive, I don't think I could be today where I am today without having the partners though. Like I admire, like you've built this business, like, you have key people and stuff, but like you didn't have partners to found it with. I had founding partners and still have partners to this day, but they help balance me, to be honest. Like I'm very aggressive. They're very conservative. Like they'll do things that I'm not good at, like, or I don't want to do. And I do things that they're not good at. So it really, we bring different values to the table that helps the whole, and I guess could you hire for that versus having partners? Potentially. Yeah. But having that ownership mindset is very, valuable, I think. And
so partnerships, was there ever a moment when, and look, God willing, life is long and there's a lot of time, a lot of runway ahead of you, but was there ever a moment where you say, I don't know if this is going to work out, or I don't know if this is what I want to do?
No, I mean, I'd say some of the challenges today are just, how do I continue finding the joy like I had in the early days? Like looking back, those were some of the most fondest memories. Like
So
when I didn't have anything, and I would drive up to, we literally went and bought the furniture for the model unit and drive trucks over to Bakersfield to set it up ourselves, and we were I was very hands on, and so I sort of got too far away from the business, and now I'm trying to get myself.
I tell a lot of the young agents here who are out there, just grinding long hours, weekends, cold calling, facing rejection. I said, what I've learned is the thing about the good old days is you never know when you're in them. And I said,
Yeah.
I'm here to tell you that for you, these are the good old days. Because
Yeah.
God willing, 10, 15, 20 years, you'll have created wealth, you'll own real estate, you'll have families, you'll have commitments. And I said, you're going to look back at, it's very hard, but you're going to look back at the simplicity of your life now, man. I mean, those were the good old days.
Yeah. 100%.
When looking back, you're like, hey, I think what I heard you say was, kind of finding the feelings that I had when I was building, like the good old days. Did you know those were the good old days when you were in them?
No, not at all. You're so right. I mean, it felt so hard those early days, but those were, looking back, like my fondest memories.
Humans have an incredible ability to forget the pain and suffering and just be like, man,
yeah.
Oh, you remember back in the day? That was so much fun. And you're like, was it?
Yeah.
Was it fun? Because
no, you're totally correct. And like literally, I was still living at my parents' house, like for a few years, starting the bit. Like
if you had to go back there today, you'd last 48 hours. I'd be like, no way. But like, no, they're in your mind, which makes it real. Like those were the good old days, and it was so rewarding and so fulfilling. So how do you manufacture today what will be your future good old days? Like, how do you keep that fire going?
I think you got to just keep growing, and like we're in the process of starting our first fund. We've never done a fund. We've always raised capital deal by deal from, call it, individuals and families. And so we're trying to do something different, and it's challenging as hell right now to raise capital from these kind of investors or any investors. But like, I think I'll look back and be like, this was a good time again. Like just constantly push yourself and do new things and grow. And I think I'm trying to get myself more involved in the day-to-day versus, I took myself out a little too far out of the day-to-day operation and stuff. So trying to
get a little bit back in the weeds.
Yeah, a little bit. Yeah.
Okay. More on the operation side, less like a brand ambassador.
Yeah. I became, which has helped us grow tremendously, but I sort of lost touch with like, I went from being on the weekly calls to, just.
How much of that do you think was like COVID and kind of this almost like kind of cultural change in how people work?
Probably a lot. I mean, we were every day, everyone together in the office, and we had like 20 at the time, and then COVID, and then we went remote for a long time, and then we went made it optional, and then we made it, and now we're getting a new lease, a much bigger place, and everyone's going back. Maybe not 5 days, but I think like 4 days a week or something, 3, 4. I don't know. We're trying to figure it all out still, but I like being in the office, and I think there's great collaboration.
There is.
And I mean, I see your office is so lively, and I think it's important for people to be at work and have a separation from work and home. And I need it. I was going crazy working from home,
especially with little kids. And after we're done with this, you're going to go over, you get to be the DJ for an hour. DJ Keith.
Let's do it.
Yeah. They're playing music. It depends on what day. Some days are hip hop days. Some days are country days. Some days are EDM. It depends, whoever gets to win the DJ rights over there, but I stay out of that. Talk to me, practically speaking, Gelt's current focus areas for the audience. Maybe there's some brokers listening, probably, in terms of what type of product markets you're looking at.
Yeah, so we were acquiring a lot of different markets, and we're trying to just focus, right? Like I've learned in my career, to focus, and so we're currently actively acquiring in Southern California, Denver, Portland, Salt Lake. Those are the 4 markets, and 150 units and up. I'd say 2,000 and newer preferred, but we'll start going older again because the cap rates have really, shot up on the older stuff. They can't get a buyer, So
if some of our guys have some 4 units in Bakersfield, you're too big time now.
I mean, literally we didn't make much money on those because they were just really tough to operate and had a lot of vacancy and tough tenants. But that's how we got started. But I mean. I'd say
maybe a little chunkier deals.
Yeah, a little. Hey, it takes the same amount of time and energy to buy a big deal as a small deal, and same in brokers to sell a small, a single family home versus a 20 unit versus a 40 unit.
It does. It very much they're almost every deal takes the same amount of time. So whether it's
Mm-hmm.
400,000, 4 million, or 400 million, if on the brokerage side, there's definitely a reality to that. What you mentioned you guys are raising a fund. Do you have like kind of a quantify how big and
Yeah, I mean, so it's been challenging the last few years. The deal size, we just kept pushing and buying bigger and bigger deals, and you know, my partners are like, okay, we're not looking at deals if it's under 50 million. I mean, of purchase price. So, and it got hard to raise the capital deal by deal when we're having to raise 20, 30, 40, 50 million of equity to buy these kind of properties, especially with leverage being lower and stuff. So we're looking at launching our first fund, $150 million fund, and setting it was hard to say how much we wanted to raise. I'd like to raise more, but I don't want to fail at it,
Yeah.
right? So I think 150 was a good number.
and that's equity to lever what 300 to 400 of acquisition.
Yeah. So the premise would be the fund wouldn't be big enough to just buy. We need to buy at least 10 deals, so 15 deals. So the premise would be to buy it, syndicate part of the deal, and then buy it as a tenant in common with the fund. So it would alleviate the capital raises on the syndication. So like the deal we just bought in Denver, 68 million, we raised like 30 million. The fund could come in for 10, 15 million, and we could syndicate the rest.
All right, and so just keep going, keep growing.
Yeah, I mean, we're over the last many years we've been talking to a lot of family offices and registered investment advisors, and they don't want to invest deal by deal. They'd rather just vet the fund sponsor and then commit the capital and then have it called.
Yeah, understand the investment box, but other than that, if it fits, it's like go for it.
Yeah, and I kept getting rejected by these guys, and I'm like, this is a great source of equity capital. Like let's start this vehicle. So we're in the process of fundraising, and it's been tough, but we're just started.
It's all I mean, just in commercial real estate, even on the VC side in the tech world, like it's just challenging to raise money right now.
Yeah, which is it's a counter indicator. It's
But
the best
again,
time to start
But
putting the money to
because
work.
it's challenging,
Yeah.
there's less people who can purchase assets. Less people
Correct.
purchase assets, it's kind of supply and demand of buyers. Values are coming down. Yields are increasing.
Mm-hmm. Yeah, we just bought this deal for 6 cap for a 2003 built, fully renovated, and it would have been probably sub 4 cap in the 3 cap range. I mean, values are down substantially for these kind of properties. Things are starting to move. There's sellers that have loans coming due and more, action. You're going to start seeing transaction volume.
When you
come up.
and look, again, you have a lot of runway. The future's big and bright. But when looking back at your career, over the last, let's call it 15 years, what would you say has been your biggest driver or motivator?
I wanted to just build something and create, and I love investing. I've been investing since I was 13 years old. My bar mitzvah money in the stock market. I just like seeing something grow and compound, and I think just keep building and then show my kids, the concept of hard work and what could be built, and the journey. Like really, just it's a great journey, and I don't know, maybe a little insecurity also, motivates me to build something of size and value, and
we talked.
I don't know, like having a chip on your shoulder kind of thing.
What do you think the chip is from?
I don't know. I always wanted to be able to build something like, my father built a really, sizable law firm. They had like 80 attorneys, and I just wanted to be able to surpass, that. I don't know.
It sounds like you're real close with your father.
Yeah, very close with my father.
Do you think some of that is, I don't know, affirmation, like just say, hey, Dad, look what I did. So he's very proud of you.
Yeah, he doesn't ever say it, but I know he is. But that's just his style.
That's the generation, man.
That's generation, yeah. But yeah, I think I don't know what motivates me to this day. Just building a business, building wealth. Bringing investors, and now I'm dealing with some of their children and grandchildren, and just long-term relationships with like-minded people that want to preserve capital and grow it safely over time. It's been very rewarding.
Look, I got to ask this question myself all the time. Like, what is it that's driving me, especially early on? And push back if you're on. I think early on for a lot of us, it's financial anxiety. It's like I have to make money. Right?
Oh yeah, I was living after SC. I went back home. I didn't want to pay any rent. I'm in the rental business, but I went back home, lived at home. I wanted to get out of that, have enough money for a down payment for my first starter home. So it took a while to get there, but yeah, it was financial for sure for the beginning. But then, over time, lifestyle creep is real. And
oh yeah, it is. But it's what it is there's always, because of lifestyle creep, there's always, I'd argue, financial anxiety, but there does come a point, again, you know, if you agree with me, where you kind of, if you allow yourself to, you're like, I'm probably going to be okay. Right. And yeah, more is always better. Right. I'd always love to make more money, but where you almost have to take a moment and say, well, why am I still going, or why am I pushing that hard? Maybe I can, maybe I can't just stop working because there's other, you know, it's probably insanity that ensues if you don't do anything, but why am I going so hard? And there's what I've found in talking to successful people like yourself is that there's actually a lot of layers, and there are some drivers. You know, sons always want to make their fathers proud, myself included.
Mhm.
Like that's a big one for a lot of us. And but a lot of times those motivations, like they kind of show up on different days. Like, you know, it's you get to kind of use them as fuel and pull on them and use them, you know, in different moments and different situations. And so
Yeah.
I love asking the question because, you know, people's just go to push play, let the recording play. Oh, I want to grow and build and give back to the community. And all of those things, I have no doubt that everyone who's ever said that actually has that as a motivation. But what I found is there's generally more
It's
and,
deeper,
and
yeah.
deeper motivations that almost always trace back to some child psychology thing.
Yeah. I think a lot of it's insecurity, and yeah, it's crazy, but
Yeah, we had dinner last night. I'm talking to the audience now, and I don't know if you asked me that question, but or maybe it was your wife, and
Yeah.
and I was just like, well, you know, look, there's financial insecurity early on in this. I said, but the family I come from, super successful guys in football, and I'm their biggest fan. But I was like, I didn't want to be known as somebody something, you
Mhm.
know. So, and that still drives me. And I tell anyone who asks, like, oh yeah, like I love their success, man. I'm their biggest fan. But no, I don't. I want to blaze my own path. So I would say that's probably insecurity too. So
yeah, no, and I told you, I mean, I don't follow football. And I'm like, if these guys said I'm gonna be like, you're Kyle Matthews' brother,
That's
I would
right.
I would reverse this.
That's right.
This
baby.
guy has created. He's a titan of industry, man. He's
Dude,
crushing it.
I
you
was
know?
walking with my brother the other day, Clay, and someone came up and said, man, you're Kyle Matthews of real estate. And I looked at him, that's right, motherfucker.
You're gonna get more and more of that because.
And then they looked at him as like, are you Chris Helmsworth, Thor? And he's like, yes, I am.
Hey, their careers have been long over, and you're just growing and growing and growing.
That's
so
right. I'm gonna drive you over to my house later. We're gonna meet some beers and we're gonna talk shit to him.
I love it.
What let me I gotta get serious again. Let's take it to a serious tip. What would you say has been the biggest mistake you've made that perhaps an audience member would be like, oh wow, okay, like I shouldn't do that?
Yeah, I think breaking some of our concrete rules, like we were always long-term fixed rate borrowers, and you know, you never want to fuck with the financing to make the deal pencil. And you know, we have 3 of these loans that we did bridge, you know, out of, you know, I don't know how many properties we own, but 30 give or take. So like 10% of our, and that's where we're struggling, you know, with these properties.
Yeah.
And you know, we you know, never should have got these damn loans and stuck with, you know, our, you know, commandments of, you know, long-term fixed rate, low leverage, but we, you know,
Control the controllables.
yeah, exactly. I mean, so, you know, not sticking with that, you know, is biting us in the butt now, but we're going to get through it, you know?
And by the way, there are literally, I have hundreds, thousands of people that I've talked to in commercial real estate, very big successful owners who are in this exact same position today.
Oh, yeah.
So that's not unique, but they almost all share a similar message. Like, you know, I knew not to do this. We had never done it.
Stick with, yeah.
And yet we did it. And so one of the questions I use as a follow-up is like, why do you, were you punch drunk with success? Was it kind of, what do you call it? Fear of loss? Like if we don't change our standards, we will never buy a deal because that's where the market is. Like, why do you think you did something that you had always told yourself you're not going to do?
Yeah, great question. Few reasons. One, I want to stay in the game and stay active, and 2, we had like one of them. We sold something and had an exchange, and I just hate paying taxes. Me and Trump, I guess. But we wanted to, you know, find a deal, and it was a very large deal, and you know, the fixed rate options were on this deal like 20 million less of proceeds, and the bridge, you know, got there in proceeds, and they financed the capex, and so it was a matter of like having to go out and raise, and I was the one raising all the money. It was going to be a grinder to be able to raise that extra money. And I'm like, okay, let's just make it easier, go a little higher leverage, and the start rate was so much lower than the fixed rate options too. It was very tempting, right? It's like it was a tease, and I fell for it. Only on one deal we wanted to get the bridge because we wanted to get in and out of the deal and have that flexible prepay. But these other two we did because I'd say the proceeds were so much higher, and it helped us, instead of having to raise the equity, having extra debt.
There's on paper such a chunkier promote, and you look at the teaser rate on the bridge is so much lower. It's 2.7 years before those lines cross in terms of total cost, and then all of a sudden it's 2.7 years later. And
who would have known the start rate of 2.7 would effectively be like 8 or something crazy?
Well, I'll tell you one guy didn't, Jerome Powell, because I think it was January of 22, and inflation was kicking on CPI like 4 or 5, 6, and he came out and said, well, we believe inflation's transitory, and we don't see a need to raise rates. And so I think 3 months before they started the most aggressive rate hike cycle in our lifetime, they were messaging that actually was not going to happen. So, JP, man, come on, get it together.
So, some real estate borrowers, they're 100% floating rate. They're the ones you're reading about in the press that are struggling. That's going to ruin their businesses. Like, thank God we only have 3, and we could get through this, right? We've never had a capital call. Still, we've lent the partners like millions of dollars to these things, and taking full responsibility, and we're going to get through it. I'm not letting these things go. I'm not losing any money, and time helps with, any deals, that thank God the NOI has grown tremendously on these properties. It's that I think time and getting it, we just need more time.
You're a natural born entrepreneur. This is basically as clear as day in understanding your story, your life, but not everyone's like that. But there are a lot of people who want to be an entrepreneur. They want to found a business. They want to invest in real estate, fine. They want to start a company, whether it's a restaurant, anything. But they aren't wired like you to just do it, all right? Or perhaps they don't have the resources to just do it. So what advice would you have for people listening who are, on the fence and like, I'd really like to buy my first piece of real estate. I'd really like to start a business. I'd like to take that leap, or even just they're stuck in a job and they know they need to shake it up, but they aren't doing it. Like, what advice would you have for someone who's staring at a decision like the ones you've made multiple times, but just isn't taking action the way you have?
Just do it, like Nike, man. You fucking just jump off the edge, and the ledge. And I think the resources, I needed to go out and find it. Like find someone that would help qualify for these loans, find someone that would help raise the money. And we gave a lot away to be able to do that, but we did it, right? So there's no, the only limitations are the things you put in your mind, right? So
you kind of break down what's the worst that can happen. And
and that too,
My daughters sometimes are afraid of the monster in the closet. And I say, well, let's look for that monster. Let's open the closet and shine a light. And you realize it's not a monster.
It's not that bad. And we have made mistakes. We're not perfect, but we started with small buildings and our own money, and then we didn't go out and go to 30 people from the day one for invest. Like we started very small, and every business, even these $1 trillion companies, started with very small, humble beginnings.
Jeff Bezos started out of his garage.
Yeah,
and I think it was to prove a girl wrong or something like that. That's the story.
Like you were telling me your story, you started with only a few brokers, and now 650 plus brokers, and growing a tremendous business. And it's still early days for you, man.
It is. Started from the bottom. Now we here. I should write a rap song that.
So you go DJ with your brokers out there.
Go DJ the floor. I always said the greatest compliment I could ever have in terms of creating environment at the office is when our agents cold call Keith Wasserman, and he goes, "Where are you? You at a bar? Because it's so loud." They're like, "No, that's the floor, baby." It's getting back to this. What's the worst that could happen? It doesn't have to be the worst, but you had DM'd me something like, "Hey, remind me to tell you about a deal story or something on." give the audience. It could be the worst thing that ever happened.
No, it was basically the story Galena told you last night. How there, it was pretty wild. Like you put on Twitter that story with how you finally found the true owner behind the building, and it happened to be one of the Pritzkers. Which was an amazing story in itself. But Galena's story is even crazier. Like she was, as a broker, she had a client that wanted to buy this one building. It was vacant for like 20 years, and just crazy, man. But like this gentleman owns like 20 some properties, and she started driving to every property, and every property was vacant, and they were all prime LA properties. And she went to every property until there was one left. It was like a condo or something like this, and then I don't know. She happened to find a relative of this guy, and he's like, you're very hot. Go to that last one. And she like just walked up, went to his condo, and built a relationship, and literally saved his butt. Like some fraud happened on one of his properties where someone borrowed money against it, and she saved him. Like, but yeah, just
the power of never giving up.
Even me with my wife, like it took 9 months for me to get a date. Like I was very persistent.
That's because you don't have any game.
My game, I'm very direct. I was like asking her, how old are you? Are you Jewish? Where are you from? I was just boom, boom, asking her all these questions.
She told me, you said, hey, you like Bakersfield, baby? I got some 4 units up there. I'm kind of a big deal.
I literally, she was so turned off of it because I had her like dream car. I had a BMW 3 Series white convertible, and I roll up in shorts, and it was hot day. And I'm like, I asked her all these questions, and I'm like, you want to go to frozen yogurt at my parents' little strip center there? And she's like, who the hell? What? I didn't have much going on. I had one Fourplex only. I mean, I was just starting.
Wearing an affliction shirt with some cutoff jeans. No, that's our president, Dave Harrington. You know, Dave used to rock those affliction shirts.
But most people don't. They give up, man. I think most people give up, and like all the best, even podcasts, like 99% will stop after a few episodes. Like, you know, the best ones have been doing it for 9 years, and they just on repetition and get better at their craft.
That's the story of Joe Rogan's podcast. Like, you know, he just was like, yeah, I just want to talk to people. And then fast forward, I don't know, however many years, I heard that guy just got paid again. I'm coming for you, Joe. So, where was I going with that? So, all right, not the what's the worst thing that happened. I don't know if we could cut this part if you want, but the story Elaine also told me of the crazy things that will happen in real estate at a city council meeting, and people, you know, objecting to developments for their own reasons. Something about there was a guy who, you know, objected to a project your wife was working on, but he was a goat and spoke like a goat or something like that.
Yeah, he had like a puppet, and the goat was talking like, and he would just start rambling nonsense and like, F this, F that, and like, I can't believe they gave this guy the floor. And it turns out, like, I think our land use attorney was telling us that this guy does this and starts, he tries to get people to them to shut him up so he could sue for like First Amendment rights or something crazy.
And
like
then
this.
After that, maybe somebody who identified as an alien came and spoke an alien.
Yeah, I mean, literally, you get the wackos that come up, you know,
in LA for sure.
Yeah, and yeah. That's actually why we like developing in these areas, because it's brutal to develop, and if you could get a project done, it's gonna be very, very valuable. You know?
And there's a big moat around your project.
Yes,
you know they're not gonna
barriers
drop
to entry
400 units across the street because like it's just too painful.
Barriers to entry are very high, which, you know, helps lift. I mean, they should.
What is and maybe like what is the craziest deal story that you have where people who aren't in real estate be like, wait, what? Like that happens? Because commercial real estate's a huge industry. Everybody knows who it is, and they would think it's a very white collar, polished, refined industry, and it's not. Like,
I mean, the craziest stories are usually the tenants and what has happened. I mean, we have 5,000 units and probably 10,000 plus people. Like, I mean, the craziest story is we once had a tenant that a resident, like, literally, I think he was high on meth or something. He tried to kill himself by like cutting himself, and then he ran. He didn't succeed, so he ran and jumped into the swimming pool and tried to drown himself. And we had to drain the pool. It was all bloody, and he lived. But then, like, just crazy stories, man. Like,
does insurance cover that? They're like, no, sorry, that's in the deductible.
I mean, I don't know. I think we paid for that. But like, we've had huge hail claims on properties where we had like a $12 million hail damage, and we've had buildings burned down, and all kinds of crazy people. And it's usually the people's, not the residents, but their friends, like bad.
Anybody strip copper yet?
Oh, yeah. I mean, when we were looking at buildings in Houston early days, we would walk through these buildings that were abandoned, and they had copper stripped out of them, caused so much damage for a few dollars of,
There's so many things in real estate that if you're not in the industry, you're like, wait, what? And you're like, yeah, that's a thing.
Yeah.
I have a great idea. You're in LA, dude. You're super connected. Zach's like, no, don't, I'm not. I'll tell him offline. I have a great idea for like a TV show.
Okay. HGTV approached me early on to be on their show, and they were looking, and I'm like,
no, I'm gonna share with you the idea, and then you and I are gonna pitch some producer and dude, I'm telling you, it's gonna sell.
Okay.
HGTV, it's like an actual. Like an HBO show.
Oh, even better. Okay.
I got a
Okay.
whole idea.
I'm down.
If it hits, I'm gonna step down as CEO. I'm just gonna be a big time.
We could add
Hollywood
producer
producer.
to,
Yeah.
Kyle Matthews producer
Hell
to
yeah.
your title.
I had an internship at SC when I was playing football at MGM
Okay.
Studios, and all my job was just to usher people at the premieres and go to the after parties. Best job I ever had. you
Wow.
know?
Surprised you're not still doing that.
Well, I don't think I added much value, to be honest. But all right, let me ask you. In looking at what you've accomplished so far, how would you like people who've partnered with you, worked with you, invested with you, or just known you? How would you like for them to describe Keith Wasserman?
Yeah. I think, I asked my mom keeps telling me, she's like, everyone talks so highly of you. Like, you're transparent, honest. These are the adjectives, hardworking. These are the adjectives that people use for me. Sometimes my wife tells me I'm funny, which makes me feel good. But yeah, I think just that's the way I want to be, looked at. Just someone that's true to their word. A lot of people don't follow through with, what they say. And I've been working on becoming a better friend. I sort of let some friendships by the wayside. I'm like, really learned the importance of having quality, friends. I have hundreds and tons of acquaintances, but close friends really matter in life. Those meaningful relationships. So trying to build on those.
For sure. What? And this isn't just directed at you, but you've probably been blessed to be around, and maybe they're acquaintances, and you're working on becoming friends with them, but build relationships or acquaintances with really high achievers and successful people. What have you found to be a common characteristic or attribute of those achievers that you've had the privilege to get to know?
Yeah, I think the most successful ones are hardworking, curious, and focused. Those are important traits, right? Like, they see the opportunity, they double down and triple down. Sort of like, you probably saw a great space. You had the big behemoths, JLL, CBRE, but then a ton of smaller guys, and you're like, there's room for an independent that'll clean up in this kind of certain size range space, and you're capitalizing on that, and building this amazing business. So I think just noticing the opportunity and going after it, and but being able to have blinders and not, you listen to people, but making your own decision from first principles, and going with your gut. I think a lot of people don't do that.
Yeah.
The gut is the best indicator.
What do you see? And this isn't just about people outside. It could even be people you manage or people you've employed, or as the biggest reason they don't get to where they want to go in life, whether it's they don't become what they want, they don't get the promotion. Like, what do you see as the most common thing that keeps people from moving forward in a way that they want to in life, but they don't seem to be able to?
I think most people are sort of just comfortable, and they're happy just clocking in and out. Like, the people that are, I always tell people, and my business partner says, if you want to just keep rising and be more compensated and valuable, like, make yourself invaluable, like, where it would really hurt to lose you. Like, don't make yourself where you could be replaced easily, right? Add just a ton of value to the organization. So, like, be, if someone wants to move up in your firm, like, as a broker, like, make yourself a the number one producing broker. Or if you're in management, be able to recruit or do something that's invaluable, like that it's hard to replace. So that if you're an employee, that's the way to really, build your careers, make yourself invaluable.
Can't remember where I heard it, but it was such a simple saying, but simple sayings work in my simple brain. It was, the best way to make yourself indispensable is to be indispensable. And by definition, indispensable means like you cannot get rid of this.
Yeah.
Like the business wouldn't effectively cease to function if they lost you.
Yeah. I mean, literally, I had one gentleman who's worked with us 8 years now, and he moved up he was actually, so Josh Sadden, former New York Met, went to Harvard Westlake, then Cal Berkeley, smart kid from the Valley, 818, Jewish kid. He worked hard as hell to make it to he played in the big leagues, and he's made himself invaluable. And I made him like an equal partner in this business now, like, because otherwise I would have lost him. He would have started his own firm, so have the golden handcuffs and freaking, really compensate people that are invaluable, indispensable, whatever the word is. Make yourself not just a commodity, like where you could swap in and out,
How would you describe your overall mentality for how you approach your life?
It's a big question, but like, my relationships, try to make them win-win. I'm not into trying to get the last dollar. I'm all about, and I saw it from my dad, right? He was an attorney and he would sue, but then he would like make friends with the other side, and they would become clients or like later or friends, or like, just try to, and like he would always try to settle versus a lot of lawyers just want to milk and bill hours, but like you build a great reputation by doing the right thing and making it a win-win situation and doing right by people. And if you do that for a long period of time, that compounds, right? And your reputation's everything. I've learned that it's so invaluable you could lose it really quickly, but it takes a long time to build. And you want, people talking good about you versus the other way. Reputation could compound the wrong way too.
Without a doubt. I got one more question, then I'm going to let you go eat some hot chicken.
Yeah.
Do a little line dance and drink a $10 tall can PBR on Broadway.
How do you know my agenda? No.
It's Nashville, baby. Everybody comes to do the same thing.
I'm going to start cold calling, man. I need a,
I don't think we have a desk. No, yeah, we'll get you one of those stand-up desks. I'd love to see a cold call if you got a minute.
No, Galena, she's
a killer.
She's a killer. Yeah.
Yeah.
I don't stand a chance against her or your cold callers. Probably. I could build long term, but she'll talk to anyone. She'll get her way into any restaurant. Like she's able to just talk into anything.
I don't think a lot of people not cold calling. I mean, some people look down on cold calling. Is like I said, sometimes people are like, man, you guys cold call. I was like, well, what else do you want? They have no business to start, right? They don't. You show up in brokerage. Most people don't have clients. Like a cold call. If you asked any of us if there was a better way, we'd do it. I promise you. It's just if I'm an agent and I'm looking, and Keith Wasserman owns a bunch of product in my business, I'm looking to make a call and have an interest generator that is just valuable enough to where you're like, you know what, I'll grab a coffee with you.
Yeah.
And that's all I need.
Just foot in the door, make it a little warmer.
And once, if I can get in front of you and I'm dressed professionally, I'm prepared.
Yeah.
And I provide something or communicate something that helps you, even if in the littlest bit, well, then I'll never make another cold call to you again. They'll all be warm calls. And the goal of making cold calls is to initiate a relationship so that one day every call you make is a warm call. And that's what all those young guys and gals are doing. They're not doing it because like, hey, my job is to make these calls and then I go home. No, it's just because that is the way, the business. And sometimes it's now it's different. I was telling the guys the other day, I said, how you guys like text? I didn't text message. Like, I had text message, but it wasn't culturally
now it's more acceptable. And
so you can cold text, obviously cold email, cold handwritten letter, but like cold basically means like there's nothing there and you need to create that spark. And so, it's just like I used to make a lot of cold calls and the good old days. Now I'm like, man, back in the day, I used to cold call so great. Now it's like, but when I was going through, I was like, oh, this sucks, but what, just practically speaking, is there a resource that you'd recommend? Is there a book, something that has helped you professionally develop that you could recommend to listeners?
I mean, I spend a lot of time on Twitter. I like following smart people like yourself. So I think just, if you don't have those personal relationships, and eventually they've become personal relationships, a lot of smart people that I followed on Twitter and built in real life relationships with. So like Twitter is a tool you could use to like, curate who you want to follow and be friends with and learn from,
Obviously there's a place for Twitter in my role as the CEO of this company, but I use it as a information news aggregator, like a very efficient.
Mm-hmm.
You wake up, if you open the app, it's ideally the last 15, 20 posts, or, it's whether it's Globe Street or CoStar, if you're in commercial real estate, whatever industry you are, it's so efficient. I'm a big fan of it.
Yeah. You don't have to like, I've stopped watching TV 15 years ago. Like you don't have to just, you get to select the news and people you want to listen to,
If you had one piece of advice to give to your younger self, what would it be?
Be easier on yourself and everything's going to turn out okay.
When you say easy, are you like perfectionist?
Yeah. That's sort of been my go-to. And it's a tough way to live because
It
nothing
is.
in life is perfect.
It is.
I'm very black and white, but it's all gray life, right? So,
I know a lot of I'm very close with a couple of perfectionists, and I tell them all the time. I said, "You're just so hard on yourself."
yeah,
So,
my own worst enemy, right?
yeah.
So I'd say be kinder to myself. Yeah, it's tough, but that's sort of what drives me too, I guess. But it's a hard way to live.
Well, you've nobody's perfect, but thus far, from an investment standpoint, professionally, you're certainly getting close. So I'm excited to see what you continue to do, Keith. I can't thank you enough for coming out to Nash Vegas and
Vegas.
spending some time with us. I'll be out in LA, I'm sure, in a month or two, and I'll come see you. But thank you so much. I hope you have a great time, and I hope you enjoy those cold PBRs.
Yeah, thanks for having me on your show, and it was a pleasure, man.
It's good to see you.
Yeah.